accounts people, time to have a look at some what if revised calculations on receipts and payments, and then we'll move on to some variance questions which are relatively straightforward. The calculations of the variances, written tasks based on them, slightly different. So one of the hardest problems on this paper is following the instructions, so we'll be going through it with a few little extra notes and a bit of discussion as well, and I borrowed this off an Osborne practice paper. So what the question gave us was a cash budget. It's been prepared 5 periods, 1, 2, 3, 4, 5. It's the next 5, so presumably we're in period 12 of the previous year. We've got a sales price and we've actually got the receipts, but they've actually given us that in the question. Similar calculations have been done before. So we're going to adjust the cash budget because we're not going to get so much money per item and the money is going to come in slower, so we need to know how much those changes will cost us in terms of our cash budget. So let's have a look, and then afterwards there's some additional information on some payment changes as well. So first thing to do though is the revised value of our forecast sales. Well, that's actually just fairly simple. It's the original sales. 92% takes 8% off, of course. And I'm on a spreadsheet, so I can whiz that across. So, of course, less sales, 8%. There's a difference between the 8% loss in terms of revenue and the amount in our bank account. So now we need to work out the revised timing of the receipts. Now it's got a bit more complicated. Some at the same month, some the following, some the month after. So I'd always recommend a bit of line paper or something, or a little table. Try and do these in the exam. Is a recipe for disaster. And if you're not writing down your calculations, when you come back to go to check your numbers, you've got to start again effectively. So the 30% is for the month of sale. So 29 times 30%. The 50% relates to the previous month. And then it's 20% of the month before that. So that's E. Which is why we've been given period 1 and period 2's sales. And of course I can copy those across, and then I can nice and simply total them. And then the answer as we'd fill in, of course, is just these numbers, so do it properly. And having our workings out on the paper saves a lot of time when you're checking your answers in the spare time. So that's our receipts done. We've got our new receipts, so we're not going to need those numbers again until we check, so might as well hide it. We've filled in the answers that matter. So now we've got original budgeted figures, and then we're going to get 2% off. However, we have to pay them quicker. So, little note here, at some point there's a month where 2 months are being paid for. That's a cash budget issue. That's £20,000 negative on our bank account that we're hoping will pay for itself in the long run. So, first of all, we need the original amount and timing of the payments. It was straightforward. These are in pounds, not units. So actually period 3 would be paying the month after purchase. So straightforward copying almost, so marks for copying numbers in. Now a revised amount and timing of payments, so 2% off and the month of purchase. So in period 3 we're going to be paying period 3's purchases, which was but only 98%. So at a glance we're paying a little bit less, a little bit more, a little bit less. So we don't know when the double month will happen. Possibly it was in period 1 when we would be paying December's and January's together because of the change. So calculations, complete the table. So this is virtually getting to the end of it. So we're talking about the effect on the bank balance. So negative numbers if it's going to affect our bank balance negatively, positive if it's more money in the bank. So this is more money in the bank. However, the receipts are all negative, 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 negative. So getting it the right way around, it's G31 and G28. I need to get that the right way around. That's not right. G30, not 38. That's better. And I already formatted it in red just to help. So that is the difference between this number, and of course it's negative. We're getting £9,350 less in than our original budget. And these are all going to be negatives, mainly because of the 8%, but also the delay as well. So delay is a temporary thing that will work out in the long run. The 8% is lost revenue. So our purchase payments, and we've got to do the other way around because these are now payments. So this will be a positive number. It's going to improve our bank balance. £816 better off. And then we've got the bad month and the positive month. That'll equal itself out in the payments and hopefully pay for itself eventually. So the net change, these are all going to be negatives, but at least we know what is going to happen to our business. It won't be formatted red in the question, of course. That's just to show it visually where the negatives are and make sure the negatives and positives are the right way around. So what does this mean? Well, it's all about the receipts really. Of this amount of money, it's all really down to the receipts, apart from a temporary one here. It doesn't show the double month, which is a minus 20 something £1,000, and the payments will be slightly better in the long run. How long it takes to pay for itself effectively is a change. Well, probably 5 or 6 years really in terms of bank interest. So, but if it happens, it happens. So on to the variances then. So again, it's about what's happening, but this now is when we've got the actual cash flow. So this is afterwards. So just to do a bit of math first, that's our total receipts. So actually is going to be less. Payments, paying out a lot more money than originally budgeted, and therefore our bank balance, so net cash flow and the opening balance, was going to be 11,700, and we're going £51,100 overdrawn. So knowing that that's happened, we need to start shouting and jumping about and threatening people, what on earth have you done? So let's do the analysis. So on our cash sales then, if we use the abs, we're on a spreadsheet, we don't need to worry about minuses, pluses and minuses. Solve problem. 7,000, actually less, got to be adverse. In fact, we can copy that down, just have a look at our receipts first. Also bad, and very bad. So we've had £19,000 less in receipts, and we know it's both cash and credit sales. As a percentage, cash has been hit more than credit sales. So same formula, because we've used the abs, we don't have to worry about doing it the other way around to show pluses and minuses. We might as well go all the way down to our payments. We've got £9,000 difference, 7,800. We've got a nil on our fixed overheads, so our rent stayed the same. And then there's a capital expenditure. So this one is our only actual favourable. we've actually spent less money paying our credit suppliers. Our wages bill went up above expected. Variable overheads, possibly because it's related to the labour. Fixed overheads, at least that one stayed the same. And a big negative here on capital expenditure, and then the overall effect adverse. So the favourable didn't make up for all the adverses. So our net cash flow for the month then, so let's have a look at this one. £62,800 adverse, which explains turning this into here. So that of course stays the same, so that's our 62,800. In terms of our cash flow, it's the same number, and of course it's still adverse. So the calculations are straightforward. Don't worry about the pluses or minuses. Obviously I'm on a spreadsheet, that helps. So let's have a look at what's happened to this business, or what we can interpret. Well, they're in trouble or what? Yes, they've got problems. £62,800 for this business, worse off than budgeted, is an issue. So must have had a bit of a catastrophe. They've replaced some machinery unexpectedly. If it was planned, you would have updated the budget and then budgeted for the fact that you're suddenly going £51,100 overdrawn, because you can't just suddenly do that. The bank manager would not be very pleased with you. So machinery and production issues are all the other variances. So the low sales and receipts, possibly it's because we couldn't make everything. Notice it was the cash that as a percentage receipts that were hit. On the other hand, it could be that we were a bit quiet, so therefore let's replace the machinery a bit early, because we have to replace it sooner or later, and we're quiet. Maybe it's their quiet period actually. Been there, done that. Or we're going to be quiet, let's rip the production unit's floor up. So not being able to pay suppliers, that could be the favourable. On the other hand, of course, if they know they're not selling so much, they could have cut back on the orders. If they're ordering on a daily basis, then that would be reflected quite quick. So the wages, it could be the original machine issues, the machines failing, or it could be getting used to new machines. It will always take time, and there's installation time and training time. And the variable overheads, the same issues, the production issues or the downtime, and as it's usually absorbed on labour hours or very labour related, it goes hand in hand with the wages. So if we knew that in advance, we would have planned. This company obviously hasn't, and now they need to have a big meeting where they're going to be lots of naughty words said, because this is management accounting in a production environment, not a nice, quiet, professional accountant's office.